what are your guys' thoughts on Bitcoin's reaction to the liquidity crisis or liquidity trap that was caused by COVID? So obviously there was this massive sell-off in most asset classes. Bitcoin at one point, kind of the Black Thursday or whatever you want to call it, sold off 50%, ended the day down about 30. And there's a lot of people who are saying, hey, this looks pretty correlated to me. And also it doesn't look like so much of a safe haven type asset. Kind of how do you guys look at what's transpired over the last 6 weeks or so?
Sure. So I'd say we're still very far from returning to kind of business as usual. So there's questions definitely that remain as to, when we'll get back on our on the horse. And that, like, I don't really know what the timetable there is, but I think it's been very interesting, to your point, to see kind of Bitcoin's response to kind of the recent uncertainty. There's some great work that's been put out by, the coin metrics of the world. There's a recent piece from the CEO of XBTO who shared his views. I think there are a few things that we need to consider here. First is that in a crisis, whether it's coronavirus or a financial crisis or a geopolitical crisis, there's always a crisis of liquidity. And there's a vicious cycle that occurs where you have basically over-levered investors who need to sell across asset classes, across every asset class. And that creates kind of a rush to liquidity where the comfort of cash basically drives correlations to one. And I say this because I think it's been interesting to see how we've seen this evolution of narratives around Bitcoin during coronavirus, where, to your point, there have been these two competing narratives that have now been heavily questioned during this first quarter. The first is, again, Bitcoin as this uncorrelated financial asset. Second is Bitcoin as this kind of safe haven asset. When we look back at the month of March, I don't think people were expecting to see as severe of a drop as what we saw. Bitcoin suffered its second largest daily drawdown in price history. And I think it was less than 15 minutes. You saw it go from 7,200 down to 5,400. It broke its 200-week moving average for the first time in 7 years, and then continue to sink to below 4K. And post sell-off, we realized that one of the largest contributors was the kind of these Bitcoin liquidations to satisfy margin calls on kind of the BitMEXs of the world, where you saw BitMEX on Black Thursday. It had almost $1 billion in liquidations, which is the most over a 24-hour period in years. And you combine that with kind of the exchange outages that it saw and all of the uncertainty around growing coronavirus. And so you kind of get this kind of natural sell-off. What was interesting to see, and you actually mentioned this with Kathy, was that it appears that the speculators were flushed out and that longer-term investors continue to hold. And so for true believers in Bitcoin, the fundamentals haven't changed. And when you dig into the numbers, and Coinmetrics shows this, some of the most of the sellers were actually short-term holders. And so if you take a look at Bitcoin's revived supply, which is how many old coins came back into circulation after being untouched for a specific period of time, the vast majority of the activity involved Bitcoin that had been that had been held for less than a year. And so this kind of suggests that the long-term holders really appeared unfazed. At the same time, you had this sell-off that was severe, and it was in tandem with an equity market sell-off. And so there are legitimate questions that are raised around if Bitcoin is worthy of allocation, if its claim to fame narrative is around its non-correlation and its safe haven attributes. If you dig into the numbers, though, historically, Bitcoin has been relatively uncorrelated with, let's say, the S&P. Since 2012, the correlation has been roughly between negative 0.15 to 0.15, which is pretty low correlation. Over this last month, that kind of increased to new all-time highs. And so the question then becomes, does the recent correlation then justify people saying that Bitcoin and the S&P are now suddenly correlated? And the answer, I would say, as many would say, is Probably not. And so although you saw these short-term correlations shoot up, you have to recognize that they were under very unique market circumstances. You had the news of the spreading of the coronavirus that continued to grow. You saw investors across every asset class rushing into cash. And back to my earlier point, in any risk-off environment, it seems like there's really no safe haven, especially not something that's like, has as thin of order books as something like Bitcoin, that where a lot of the activity and trading activity is driven by speculation. But I mean, we even saw this with gold, right? The correlation between the S&P and gold was also tied since 2013. And so I think that we're going to see some sort of kind of reversion to the mean between Bitcoin and S&P, but that in the short term, there may very well be kind of strong, high correlation between the two. On the safe haven asset side, I would say, gold has traditionally been used as that primary example of a safe haven asset, and many like to coin Bitcoin as a digital gold. And so, usually in uncertain times, you see the price of gold increase relative to other asset classes. And Bitcoin and gold's correlation historically has been relatively low. Like there hasn't been very strong correlation. In fact, at the extremes, they've been negative. And so when we saw Bitcoin and gold's correlation also spike up in March, similar to Bitcoin and S&P and gold and S&P, does that mean that gold also failed as a safe haven asset? And I would say the answer there is also probably not, where you start to realize that although Bitcoin and gold may not act as safe haven assets during kind of a global pandemic, they may act as a safe haven asset, in times of monetary inflation or QE. And so, let's say given the recent $1 trillion injections that we've seen from the Fed, it's possible that you have Bitcoin like gold that may act as a safe haven in response to some events, but not others. And so that's kind of where I stand with kind of our reaction, where it's like, we could be in the midst of what could be an interesting inflection point, where if you continue to see kind of central banks inject these money into the economy at these rates, then it could act as that safe haven during that particular shock. But really the broader point is that fundamentals haven't changed, that there needs that Bitcoin is still working as designed. It's producing roughly, a block every 10 minutes. It has an auditable and transparent supply, and it enables kind of permissionless storage and transfer of value. So